It's Wednesday, November 11th, and we're 3 hours into trading. Hello, traders. Let me start today by thanking all of the veterans. Thank you so much for courageously serving our great nation and for preserving freedom around the world. I'd like to dedicate this video to you, and let's see if we can find some trades that'll make you money. We've got a market that's inching its way higher right now, not a lot of volume. I am very bullish. I'm very bullish right here, and I'll tell you why. We're really going to focus quite a bit on the market. This is a time when I think you can spread your wings a little bit, increase your allocation and your market risk exposure. We want to be long. So here's what happened. We had that massive gap up on Monday on the coronavirus vaccine news, and then we spent the entire day selling off, and this is where we closed Monday afternoon. Yesterday, we opened lower, tried to come in and fill that gap, but we continued to sink down. And this low actually coincides with the close from Friday. So what that means technically is that the gap is filled. So it tested the breakout. Anytime that the market gets ahead of itself, we can expect profit taking. We have a PE ratio of 23 on the S&P 500. That is rich by historical standards. So we want the market to just grind higher, and I believe it's going to do so. It's going to take time for stocks to grow into these fairly lofty valuations. With a vaccine that's going to be distributed probably just after Christmas, about 20 million units here in the US, and with Eli Lilly just announcing that they've got a very effective antibody for the treatment of the coronavirus. We have Moderna, we have AstraZeneca. Both of them are in phase 3 clinical trials. Both of them are mass producing their vaccines so that when they get that approval, they will be distributing it as quickly as they possibly can. Now, we've got coronavirus cases spiking right now, so we are not out of the woods yet. Asset managers are not going to wait for the economic recovery. They can see what's happening. They can see the light at the end of the tunnel, and the coronavirus has been suppressing our economic activity as people stay home. And they know that that is going to improve 2-3 months out from now, so they are ready to buy stocks right here. Now let's take a look at the market. You can see how it's floating higher. We have a bullish 10P cross after a compression right here. I think this is an excellent entry point to get long. I was long earlier in the day. Continue to stay long. I am swinging from the long side also. That means that I'm holding S&P 500 futures overnight. My average price is around 354.75 on the SPY. And I use the SPY because everyone has those quotes. Not everyone has futures quotes. In any case, you can see how the market has been very, very tight in here, but it is starting to grind higher. We'll watch in the background on a 5-minute basis, but let's go into that daily chart. Let's see what's happening here. That is your explosive move higher Monday, and that is the reversal. Now, typically, a reversal like this would be a bearish indication, and you would see another leg lower and another leg lower, and once that breakout fails, you get heavy selling on the backside as buyers who came in at this level exit their positions and take losses. We're not seeing that. What I've seen this year is that when we do get these big gaps up that get ahead of themselves, we will have an intraday gap reversal and a close on the low, normally a warning sign. Then the next day, the bid is checked. Sellers and profit takers are seeing if the buyers are still lined up. Once we get through a day like that, and if the market is able to hold the breakout, then we get a rally the next day. I believe we're going to start grinding higher. And by the end of the week, we could even be up above SPY 360. That's what I'd like to see. A close above SPY 360 on Friday. I think we're going to get it. The price action today has been very bullish in my opinion. You can see these long tails under body. That tells me that on the open, they're checking the bid, and then the market is moving higher. Check the bid, market is moving higher. So I like what I see right now. On a daily basis, we have a double bottom, higher low, and a breakout to a new all-time high. So get long. Our stop on this is going to be SPY 350. If we close below SPY 350 right here, then you need to exit some of your long positions. What does that mean closing? That means that you check the market 5 minutes before the close. You can let it do anything it wants to during the day, but it has to close above 350. As long as that condition holds, we're going to continue to trade from the long side, and I'm actually getting aggressively long right now. So there are a few times a year when I will get aggressively long. This is one of them. I also feel that we have seasonality playing in our favor. Everyone is fearful of missing a year-end rally, so asset managers are out there allocating money. Let's go into some of the searches and take a look at the stocks that I like today. We're just going to take a look at a number of different stocks. We'll go into my heavy buying list first, and we'll just knock through these. I'm going to go in a daily chart. First, I have to like the daily chart. If I like the daily chart, then there is an opportunity for me to swing trade the stock from the long side. ETSY, couple of tails under body, 100-day moving average holding, stock on its high of the day. Yes, also through the 50-day moving average, I like ETSY. I think that sets up well for a day trade today. Look at that strength. Love it. Very few pullbacks. Even though the market has been just kind of sideways during the last hour, this stock is continuing to move higher. Let's put the SPY overlay up. You can see the gray line, market sideways, 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 stock ticking higher. That is relative strength. That's exactly what we look for, and that increases our probability of success. On a micro basis, you can see the market right here. It had this little bit of a dip, and if you're trading S&P futures from the long side, that little dip you would have lost money on. But if you're in the right stock, tick, 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 higher, you still make money. That, on a micro basis, is the advantage of trading relative strength. That's what we do. That's constantly what we're looking for. Heavy volume, breakouts, relative strength. A lot of our searches are based on those criteria. So let's continue to go down the list, see what else we've got. So I like ETSY. I think that sets up well. You could even consider a bullish put spread down here using the 105 level. And sell the 105 puts, buy the 102.50 puts, do that for a credit. I like it. This is not my strongest candidate. You can see it's pretty choppy in here recently. There's a decent support level though. I know I'm going to find better than that. PDD, beautiful horizontal breakout, tail under body, zoom, right up back to the high. I think that you can sell a bullish put spread right here, keying off of that 97.50 level. Qualcomm, really like Qualcomm. Big breakout here, able to hold the gains during some market weakness, market volatility. Stock looks good. mRNA, they're going to be releasing their vaccine as soon as they get the phase 3 clinical trial results. Everyone's very optimistic about it. Seems to work under the same premise that the Pfizer vaccine works under. And you can see how the stock is taking out this resistance level right here. Also looks pretty good. Bouncing off that 100-day moving average. Here you've got another one bouncing off the 100-day moving average. This is McDonald's. Two long tails under body. We're already through the earnings announcement. You can see how it reversed Monday, gapped up before the open on that earnings announcement. Sold off with the market the whole day. 100-day moving average preserved. Stock at 218.28 right now. Key off of that 210 level. McDonald's, I think, works well for a bullish put spread. We have earnings out of the way, so let's go out to the November 20th expiration date. And let's take a look and see if we can get anything for the 210s. McDonald's does not have a lot of implied volatility because the stock doesn't move much. If I've got $2.50 between the strike prices, I need to get 50 cents for this spread. It's only 15 cents bid offered at 24. We can get about 20 cents for it. No, thank you. I need to do better than that. I need to get a better credit for it, but I do like that point right in there. Yes, I can go farther out in time if I want, but right now I'm trying to keep my trades inside of a 3-week window. So we'll go out just one more week and see if that helps matters. So now we're going to go and check that 210, 207.50 bullish put spread. Here you can see it's 22 cents bid offered at 41. Probably could get 30 for it. It's still not quite there for me, but I do like the setup for McDonald's. Plug, PLUG, beautiful. Big breakout here. Can't say that I'd be selling a bullish put spread on it. This is a good stock to day trade for me because it's a little bit too far out of the gate and it does have some pretty big pullbacks like that. Rather see something that doesn't have quite as dramatic a pullback. Starbucks has no option implied volatility. Stock barely moves, so we're not going to be looking there for any option trades. Could we do some stock day trades on it? Yes, absolutely. This is nice. You can see how the stock got pounded right in here. You got a horizontal breakout right here. Now you're above the 200-day moving average. Big volume in here. Symbol QRTEA. Pretty cheap stock. $8.65. No need to sell options on it, but I would day trade it from the long side. Oh yeah, very, very nice. Put up that 1 OSI indicator. Take a look at that orange line above zero right there. You know it's strong relative to the market. See how easy? We're just going through our heavy buying list right now. That stock had actually pulled back pretty far off the high. PCG, nice big run here, pretty big pullback here. Take a look at the daily. I bypassed it because I would not be trading it. And yes, you can see why it pulled back so hard. It's right up on that 200-day moving average. Rally, 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 hits a 200-day moving average. Profit takers come in and they spank that stock. Right there's a 200-day moving average. See ya. If you're day trading or swing trading, you need to be aware of where these major moving averages are. They're very important because every other trader looks at those same moving averages. It's a self-fulfilling prophecy. Same thing holds true if you are able to visually identify a nice, tight, long-term trend line with multiple touches along it. That validates it. That means it's significant. That means everybody's looking at it. You've got proprietary trading firms. They're able to algorithmically draw those trend lines as well. So they are relevant. Let's go into another search, relative strength 30. I can't say that I've still found the stock that I'm going to sink my teeth into today. By the way, I got to revisit Boeing. That was our pick yesterday. Netflix, nice horizontal support. Not good price action for the stock. So no, I don't see anything I like there. ZM, no thank you. Tesla, no. JKS. JKS is a solar company. This stock has been red hot. You can see how it's bouncing off of this support level right here. It's made a huge run though, so this one carries a fair amount of risk to it. Could you perhaps sell a $55 bullish put spread? Maybe, and you'll probably get some decent premium for it just because the stock moves so much. Let's take a look at it. Just for the heck of it, the stock is at $68. I'll bet we can get a decent credit on this even in November. I don't know if we'll get that on the 55 put, but let's see. So the 55, 50 bullish put spread, you can see it's 40 cents bid, offered at 80 cents. So you can almost get 60 cents for that. Not too bad. 60 cents for a spread that's that far out of the money is it just demonstrates how high the option implied volatilities are. But the stock is too volatile. I wouldn't trust it here. Z, letter Z. I like the letter Z. This is going to be the one that I show you today. Downward sloping trend line, breakout to the upside, above the 50-day moving average, earnings right here after the close, huge bullish earnings reaction to it. Now we have the sell-off that happened Monday after the big market spike up. Yesterday, the stock comes back down and checks the 50-day moving average, and it closes near its high of the day. Today, we're rallying up, and we're about to take out the halfway point of this red candle, which also represents the prior all-time high. Yes, I think this stock looks good. It works well. Let's see what kind of premium we can get. We have to go down to about that $96 price level. Stock's at 107. Hopefully it's got some decent option liquidity. We'll probably have to go out to November 20th. And so let's see what those 96 puts are trading for. Do a 96.95. And you can see there's just nothing in it for us. So got to keep looking. You can go further out in time. You could go down to this strike price in December. So let's do it. I'm going through this mental exercise along with you, so you're kind of seeing what the process is. We'll go to December, normal option expiration. I am not going to do this trade. It's way too far out in time for me, but I just want to do it for illustrative purposes. There you can see even the 85-80 bullish put spread. You're going to get maybe 40 cents for that. Not enough for me. How about that 96? There you'd have to go with a 95-90 bullish put spread. And there you could get a dollar easily, probably $1.10 on that. So if you wanted to play it pretty safe, you could go below this 50-day moving average here, right in there, and you could do the 95-90 bullish put spread expiring December 18th for a $1.10 credit. If that spread expires, you're going to make somewhere in the neighborhood of about a 28% return. Yes, that's a nice trade. I think it's a good one. It's not one that I'll personally do. So let's keep looking, see what else we've got here. And I'm going to go into bull run. This is going to show us some stocks that are really continuing to move higher right here. And I'm just clicking through to see what we've got, to see if there's anything that I like. Ooh, that's pretty nice. That's Citigroup. That's a bank. Banks have not moved much, but they have moved this week. And there you can see it's above the 100-day moving average. I'm not going to touch that one. Facebook, nice upward sloping trend line here. I can't see a whole lot of strength in here right now, so I got to take a little bit of a pass on that. And I'm going to keep clicking down, see what else I can find here. I'm going to go into my pop bull search, see what we've got there. mRNA is coming up again, Moderna. And let's take a look at Pfizer, because that might give us an idea of what mRNA will do. You can see Pfizer, initial reaction to that news, fantastic. It's been settling back ever since. So I feel that mRNA may do similar. Walmart's been great. I love the price pattern, love everything about it, except it announces earnings on 11/17. So we've got it taking out this resistance level right here. It's been strong relative to the market. We've been trading it today in the chat room. We don't have a spread that we can do on it, but I think that Walmart sets up well for day trading, buy dips. So it's had actually very nice relative strength. I still don't think I've given you a good spread. Boeing. This is one that I recommended yesterday. Stock had moved a little bit higher today. And yesterday I showed you a bullish put spread where I believe we're settling the 165, 160 bullish put spread in November. That stock's actually doing well. We want to see it preserve that 200-day moving average. This is the type of company that will benefit from a stimulus bill because there's money that will likely be allocated to airlines. Plus, if the vaccine is distributed, more people will start traveling. That's good for airlines. That's good for Boeing. So I think that Boeing could actually have put in a low and maybe a very nice stock to just start selling some out of the money bullish put spreads on longer term. All right, let's go into custom search. I still didn't find anything that I liked. So we'll continue to do this as long as we need to. We're going to find a good trade in here. We're going to look for heavy volume. We're going to look for good options liquidity. I'm going to look for earnings that have already happened in the past. I don't want to be fumbling around with that. I want to sell a bullish put spread, and I want to make sure that I'm not having to reel that back in before earnings. Stock above prior day high. We should get quite a few candidates in here. Yes, we've got quite a few to pick from. Some of them we've already seen. And we'll go into maybe strength versus SPY on a D1 chart. Let's see what else is coming up. I still want to find another stock. Now, it's a pretty quiet day today, and that's part of the problem, is we're not seeing a lot come up. CORT, KMI. Some of the energy stocks have done well. I am not buying into energy stocks. PACB, that's a healthcare stock. You can see how much that's run up. Nice breakout here. Excellent price action today. Definitely would be day trading that from the long side today. So we've got Plug and Starbucks and Schwab. I'm not seeing anything I like in there, so I'm going to have to go off menu right here and go to a stock that I've traded today. And that is Apple. Apple's actually held up really well. You can see this is the price action Monday. It rallied a little bit. It didn't give back too much. It's been able to hold pretty strong, and that 50-day moving average is coming into play right there. We also have this downward sloping trend line right here that you can see visually. The stock has been above it, was able to hold it. We've got the 100-day close by. I like Apple. I think Apple works well. Doesn't carry a lot of option premium. Ideally, we can get below that 110 strike price, but we're probably going to have to go out to December for that, so it's going to be a longer term bullish put spread. We'll look at selling that December 110, 105, or we'll do the 110, 107.50, and there we need to get a 50-cent credit, and you can see we're right there. So in the course of the next 6 weeks, if Apple is able to preserve the 100-day moving average and that 110 price level, you will make a 25% return on this trade. Pretty high degree of probability that this spread will work out. You can also see that it is below the 1 standard deviation, and the blue dotted line is the 2 standard deviation, and the black line here is the 100-day moving average. Just makes it much easier when we're doing our credit spreads, excuse me, to be able to see that right in the option chain. So Apple's a stock I like. The credit spread that I showed you is a little bit too far out in time for my personal preference, but for many swing traders, it's ideal because it's way out of the money and there's still lots of time till expiration on it. Personally, I like to sell bullish put spreads that expire inside of 3 weeks so that I can take advantage of accelerated time premium decay. But the farther out in time you go, the farther out you can distance yourself from the current price of the stock, and you can increase your probability that way as well. So that's it for today. I hope that you like the content. Again, thank you, veterans, for all that you do. I hope that you're enjoying your day. We'll see you all tomorrow. Please make sure to give the content a thumbs up if you like it. Make sure to subscribe to the YouTube channel so that you never miss any of these videos, because they all have great trade ideas in them. Thanks again. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.